Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over Zillow. Why did they exit the market? And all I have are articles telling me why they exited. Doesn't mean this is the exact reason, but it does make some sense. At least this article does, and that's why I'm using it. So let's dive in and see what's going on with Zillow and why they might have exited the market. It says the housing market is so red hot, it broke Zillow's algorithm that predicted how fast prices would surge. It says Zillow announced Tuesday it will close its iBuying unit and lay off 25% of staff after huge losses in the chaotic market. It was using algorithms to find homes for fast flipping, but the market's wild price changes were just too unpredictable. The volatility far exceeds what we anticipated, CEO Rich Barton said, adding that it made algorithmic buying too risky. Zillow thought it had revolutionized the home buying experience with advanced algorithms, but it was no match for the pandemic-era market. Zillow Offers was meant to be the company's secret weapon for flipping homes, launched in 2018. The business used algorithms to value homes, purchase certain properties, and sell them soon afterward for a healthy profit. The company aimed for this instant buying or iBuying arm to become a new cash cow. It was targeted annual revenue of $20 billion. But maybe Zillow should have paid attention to how house flipping grew smaller and smaller during the pandemic. Of the hundreds of homes listed through Zillow Offers, nearly 64% were being marketed for less than Zillow bought them for, according to insiders' analysis of Zillow's inventory in October. The company announced on October 17th it would pause buying homes for the rest of the year. Mere weeks later, Zillow said it would shut down the iBuying business entirely. The problem: Zillow's formula couldn't beat the white-hot market. Fundamentally, we have been unable to predict future pricing of homes to a level of accuracy that makes this a safe business to be in. In the company's third quarter earnings report, Barton noted the unpredictability of forecasting prices far exceeds what we anticipated, and the growing Zillow Offers would result in too much earnings and balance sheet volatility. In a sign of what an existential risk this unit was becoming, Zillow has announced plans to lay off 25% of its staff. Barton said this algorithm had a high likelihood at some point of putting the whole company at risk, not just the iBuying business. Forecasting the pandemic-era market is no small feat. Prices have surged at a record pace through much of 2021 as buyers rushed to capitalize on low mortgage rates. Decades of underbuilding left the market with a massive shortage of homes, exactly what I've been saying. When new houses hit the market, intense competition was fueled bidding wars that only drive prices higher. This rally has cooled off in recent months. Prices rose to record 19.8% year over year in August. That is also the peak of the market. That is also the worst time to buy a house is July. It closes in August. According to S&P CoreLogic Case-Shiller Home Price Index, that matched the inflation seen in July, marking the first time in 5 months that price growth didn't accelerate. Month-over-month readings show a more dramatic slowdown. U.S. home prices gained 1.2% in August, signifying a fourth consecutive month of slowing price growth and the smallest one-month jump since February. The data suggests Zillow paused its instant buying arm as the price boom started to ease. Its third quarter report reflects as much. The company will write down about $304 million in the segment and include Zillow Offers. The sum reveals just how large of a hit the company took by buying homes at higher prices than it expects to sell them for. But Barton said the problem is bigger than that. The housing market is just too crazy. We've been unable to accurately forecast future home prices at different times in both directions by much more than we modeled as possible. The damage isn't expected to end in the third quarter. Zillow also anticipates between $240 million and $265 million in losses in the fourth quarter from homes it plans to buy, the company said in its earnings report. Underestimating the housing market's chaos will come at a steep cost for the company. Zillow expects to lose nearly $500 million from its home segment just 6 months. So what does this mean? What does it mean to me? It means to me that they couldn't accurately predict house prices and that they were not able to accurately negotiate and leverage a good buying price in this market. Their AI was garbage, in my opinion. They did not do enough due diligence. They did not do enough, we'll call it, investigation into the house, seeing that they're buying a good property, and they overpaid. They overpaid in what I would say is one of the easiest markets to make money in as an investor. They could not do it because they relied and put all their cards on AI, and AI doesn't work. And I have a feeling that's probably what's going to happen with a lot of these electric cars that are self-driving. The AI is not advanced enough. It's not smart enough to do what a human can do. And that's why we can't replace a lot of the workers and automate a lot of these things. We can automate some things, but not all of it. It's too complicated. And I think that's what happened, is they came into something that was too complicated for algorithms to figure out. You can take good pictures of bad homes, and the AI will probably look at it and say it should be worth far more than what it really is. And they got caught on the wrong side of this. They didn't do enough due diligence into their artificial intelligence in the software and buying homes at a good enough price. So they got smoked. They got smoked. So my opinion is the market, we don't know if this market is softening or not. We have seasonality baked into the cake. The strongest quarters are in the summer. At some point, this is going to slow down. And maybe we're at that point. Maybe it is slowing down. But we don't have enough homes. We still have a housing shortage. Prices are still going to go up. They may not go up at the same rate that they were before. The strongest price increases in real estate happen between a recovery phase and an expansion phase, because that is where the new homes have to accelerate to be built. That is the exact spot that we're in. We need to accelerate new houses being built. It is the strongest pricing period. And maybe the event that happened in 2020 accelerated some of this stuff. But the underlying structural conditions were all the same before. We still had home shortages. We still need to build more homes. It may have accelerated the price increases based off of the demand and how this demand's interacting with supply in certain cities. Do I think that a lot of these cities are going to continue higher? Yes. Is it going to continue higher at the same pace? Probably not. But we'll see. We'll see. I'm still very bullish on real estate and higher prices. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.